Felix here, and good morning to you. On a day where the market is moderately red, what am I on about? I want to explain to you what the Fed just said yesterday, because Fed Chair Powell, even not Fed Powell Chair, changed his language, and he referred to certain things that have happened recently and how that's going to affect their policy. And in my view, it freezes the market for the foreseeable future. So I want you to understand it. I'm going to walk you through it in full detail. One announcement on Sunday. If you're a beginner trader, if you think what I do is maybe too complicated, if you haven't got a lot of time in your life, I will teach you a one-stock trading strategy. Backtested this over 8 years, 80% win rate, and I'll teach you the core strategy of that on Sunday. FelixFriends.org/webinar. Sign up, grab one of the last spots, and let's run through what he said and what the data is and what it really means. I think this is incredibly important. I think this is what's going to move the market in the near term. So what did he say? Well, he said that they're basically going to skip a rate increase. That sounds bullish, right? He also said that the recent run-up in long-term treasury yields, if they persist, could lessen the need for further hikes. Which again sounds okay, maybe less rate hikes. Isn't this a good thing? Should we not be bullish on this news? Right, there's the next quote. He said, given the uncertainties and risks and how far we have come in raising rates, the committee, not the golf club committee, but the Federal Reserve, is proceeding carefully. That sounds positive again, doesn't it? Maybe they're not going to do as much. And then he says, you look at the incoming data, and then he says, and the balance of risks. So is it going to get better or worse? And that's new language. Again, you might read that and you think, well, that's good news. He's becoming more cautious, becoming more careful. There is a but. There is always a but, isn't it? And this one is large and could do with some Ozempic. Now, additional evidence of persistently above trend growth or tightness in the labor market. So there are two things here. One is growth, and two, it's the labor market no longer easing, could put further progress of inflation at risk and could warrant, he uses the word warrant in a sentence, further tightening of monetary policy, which means higher rates and less money. Are those two things something we should be worried about? Well, have a look at the most recent data out. The labor market, right? He said if it stops easing, we may have to do more. And that could be just keep the rates higher for longer, which will just obliterate the economy, or raise them more, which is just like madness, or just keep shredding money, which will tank the stock market. Well, the initial jobless claims out, the last data, October 19th, we got 198,000 people basically fired. I mean, it's not quite the same thing, claiming unemployment benefit. We were expecting to get 212,000. So the expectation, I'm writing behind my picture, all right, was 212, we got 198. What does that mean? Less people got fired. That means the labor market is tighter. They want higher unemployment. That's been the mantra for the last 18 months or 20 months. What about October 6th, which is the last unemployment data and non-farm payroll, NFP, which is not some sort of fluffy coin token, but the most important labor data the market looks at. And we were expecting, so expectation here again, 150 to 170,000 new jobs. That's what non-farm payroll is. New jobs. It just excludes cows and goats. And that's a joke. We got 336,000. So we got almost double the number of jobs created to what we were expecting. And what does that mean? Unemployment comes down. Well, it's at 3.8%. And the labor market is tight as anything. So if you look at his wording, the two things, or the one thing, the jobs thing that he wants to ease, is done the exact opposite. What about the economy? Well, the Fed also published yesterday something called the Beige Book. And the Beige Book is something that nobody reads who's got a life, but essentially it collates all the data, all the Federal Reserves across the US collect, and it's put together into an economic forecast which says what the economy is going to do. They're saying US retail sales exceeded forecasts, so it's stronger than expected. Industrial production strengthened. And let's face it, industrial production, manufacturing was the one thing the Fed actually managed to destroy over the last year. And non-farm payrolls have gained. So the economy is going up. It's much stronger than they want it to be. And he said, look, either way, if you get some good data, a few months of good data are only the beginning to build confidence. So even if we get say 3 months of data that's different from what we have right now, and at the moment we've got data that goes against everything he wants, they won't do anything. They're not going to start cutting rates. They're not going to stop shredding money. They are going to be patient and wait. Patient and wait means less money out there because they are shredding money every week. Now, another Fed president, Patrick Harker, he said the bank should hold interest rates steady, but he wouldn't hesitate to support more hikes if needed. And he said we should be patient. And the patient thing is the problem, because the patient thing is going to put the patient into the coma, the patient being the stock market, because they're going to keep rates high for longer. Let me give you a few real-world data points that are pointing in that direction. US 10-year yields, which is essentially the risk that the market is factoring into government debt, is higher than Greece. I'm sorry if there are any Greeks on the channel here. You are lovely people. You have an amazing country, incredible food, and you're kind, but you live in a banana republic. You always have. The government collects almost no taxes. No one pays them. It's a complete shambles of an economy, at least from that point of view, except for shipping. But again, they pay no tax. So the US is deemed riskier by the world market than Greece, a country that got bailed out by the IMF and the European Union not that many years ago because they were bankrupt. You get the picture, right? Now look at this. Again, I've got on here the US 10-year yield, and I'm sorry we're going to have to talk about bonds a lot in the coming weeks and months. The US 10-year yield, that line there, which is upside down, it's inverted because that way it should move together. It should move in line with the light blue line, which is the S&P 500 PE ratio, or the forward PE ratio. Basically, what's the valuation? And what can you see? Well, there is a great big chasm. It's a word I don't use very often. There is a gap here which should be filled. So either yields have to come down tremendously to fill the gap, or the price of shares have to come down to meet it. And how much would they have to come down to meet it? From approximately 18 to approximately 13. That's pretty significant, right? That's like a 25% reduction, which from a lot of other data I looked at kind of makes sense. Now, in addition to this, and smash the like button if you're still here and listening to this old economist and banker drone on. I'd love it if you did. I know it's easy to miss and it's hard to find and it's a thing that could burn a calorie. And why would you if you could just throw in some drugs and lose all that weight, right? Make me some money with no one to disk. War concerns. This is, again, headline screenshotted from this morning. The US just said its military bases in Iraq and Syria are increasingly under attack from drones. An American destroyer shot down a cruise missile today, overnight, which was launched by Yemen towards Israel. So if you thought that there was a possibility of this war escalating, well, there's a possibility. I'm not saying it's going to happen, but there's a possibility, right? Yemen. Yemen is pretty far away from Israel. Look on a map. What the heck are they doing? Firing in that direction. And then you have Amex today. I've got an Amex card lying around here somewhere. Apparently, you Amex consumers like to pay Amex a subscription fee, which is kind of madness. They just raised their fees to $350. Why would you pay for a credit card when you get one for free? Total madness. Anyway, what they're saying is, yes, cards spending is slowing, says Doomberg, but they're kind of wrong because volume, which is transaction volume, jumped 7%, missed slightly estimates, still glorious earnings. And where are people spending money? Well, on travel, in entertainment, and in restaurants. So one of the fastest growing T&E categories. Now, that doesn't exactly say to me the US consumer is freaking out. They're traveling, they're spending money on entertainment and on eating out. Those are things you cut if you're really worried. So the US consumer is stronger than the Fed would like them to be. They still have some of that bailout money stashed away under the mattress or in an Amex account. Now, also, we have economists out who are pretty much always wrong. But in this case, it's actually a problem. Because economists are predicting, American economists at all the investment banks. So every investment bank employs at least one economist, and everyone in the investment bank completely ignores whatever he says because they're generally perceived to be idiots. Sorry, that's the reality. They're not idiots, but they're typically wrong, and it's irrelevant. But the media listens to this. And they're saying economists boost US growth projections, reduce recession odds. Now, what's the impact of this? Well, the actual effect of this is lower growth and a recession. It's a little counterintuitive, but let me walk you through the thought process here. Consumers read this. This is going to get regurgitated by every media outlet out there. So therefore, the consumer is more confident and they're going to go out and eat more meals. What does that mean if the consumer is more confident? Well, they spend more. So more spending. What does more spending do? Well, more spending means higher GDP, but it also means higher inflation. And therefore, the Fed sees this and reads this, and they have to step in. So the Fed has to keep rates higher. So positive expectations on the economy at the moment is the last thing we want. The last thing we want. We want people expecting that everything will crash and burn and the end is near, because then the Fed will start cutting rates. Till they do, the economy can't actually properly recover, nor can the market, at least not in the longer term. And then you've got El Presidente, Papa Biden, and he gave a 10-minute speech yesterday. And he spent, I think if that's correct, $105 billion in that speech, which, am I allowed to correct that? What doesn't look like a 5? What does that do? What does it mean if he's spending more money? Well, of course, the US doesn't have $105 billion. So that means more debt. What does more debt mean? Well, more debt means higher yields, higher interest for bonds. And what does that do to the stock market? Well, if you can soon get 6% from the US government, why the heck does anybody own shares? So it sucks money from stocks. It's like the Hoover that's hoovering everything up. So there we are. I thought I'd cheer you up. But no, seriously, it's not doom and gloom. It's not the end is near. It's just I think that these things are important to understand what they're actually saying and what I think it means. Now, this is the pre-morning. It's not as bad as it looks because most stocks are down less than half a percentage point, which is sort of like room for error. Nvidia down another percentage point. We closed out of our Nvidia trade yesterday with a profit. Tesla's down a bit. Visa is green, I guess, on the Amex data, and Meta is green. Netflix is still up. What's that? Oh, that's Merck. Okay, the evil people at Merck. So, yeah, futures down 0.4%. Volatility up a little bit. The dollar is flat. Oats are up, so breakfast just got more expensive, which is serious. Silver is also up, and crude is up. Let's have a look at one more thing here, and I'll take your questions. So smash the like button, and I'll take all of your questions. That's why we do this live every morning. It's nothing like Earl Grey, is there? So I know I'm fairly ridiculous. I appreciate my ridiculousness. I've always been that way, so it never really fitted in. So crude oil volatility, which I'm sure is the first thing you think about in the morning. Go, darling, have you seen what the crude oil volatility index is up to this morning? Well, it's at 45, which is since the Israel war started, it's doubled. And that's the fear in the oil market. And that's way, way higher than US oil, which is why I'm looking at it, which is at $89, which is pretty high, but not like insanely high. And part of that is that so far, nothing has really touched the oil industry. So you've got all the oil tankers in the world drive past Yemen, by the way, but fairly far off the coast. So Yemen can't hit Israel. It's fairly unlikely that they can hit an oil tanker. Iran is pumping out more oil, so they're making money out of this, but the Saudis are pumping out less oil. So that's kind of keeping oil prices moderate. So Israel also, if there is going to be an embargo on oil to Israel, it'll do nothing at all, because Israel imports virtually, well, very little from the Middle East. They seem to get their oil from Africa, and they could always get it from Europe or the US or Brazil or Venezuela, whose dictator is now apparently a lovely chap, really kind-hearted and all of that, because he has oil. There's a pretty good impression of Saddam Hussein with his mustache. Have you seen the Venezuelan El Presidente? Have a look at him. Venezuela president. Actually, one of our coaches is from Venezuela. There he goes. That's a pretty good mustache, right? And then have a look at Saddam Hussein. I know he's being forgotten, isn't he? Hiding place. There he is. You see that? When he was still happy, because he could still torture and maim people, that sort of thing. So, there's a resemblance. Anyway, enough of that. Oh yes, this. I'm very excited by this. Have you seen this? This is something I've been wanting to do for years, honestly. So I've been writing in journals my not whole life, but at least the last 10 years when I started to make some money. And I used just crappy journals. So I actually made this, the Wealth Accelerator Planner. It's a hardcover book, and it's like a 90-day journal. So for 90 days, you get these lovely morning, evening goal-setting things, what you want to be doing, weekly reviews, monthly reviews and previews, and what your whole life's all about and everything else. So if that's something you're interested in, there's a link down below to the Amazon order page. And I got the hard copy about a week ago, and I've been using it every day. And it just makes me really I really enjoy it. I sit there in the morning and I go, brilliant, absolutely brilliant, exactly why I'm getting out of bed today. And in the evening I go, okay, this is what I've done today. This has been really, really good, and I can do this better tomorrow. It keeps me really focused, but in a really positive, nice, sort of supportive kind of a way. And this is scientifically proven, by the way. If you think this is all gobbledygook, it really isn't. It's 148 pages of journaling space for you. So check it out. felixfriends.org/ what's the link? What's the link? Oh, I don't know. Does anybody know? It's in the description. planner. felixfriends.org/planner with a double N. The link's down below if you don't want to type. So if you want to get your hands on that, you are very welcome to order it. So we have to take some questions. Well, we're missing about 320 likes at least. So maybe I'll go on strike like the people in Las Vegas. About 500,000 Americans are currently on strike. It seems to be a trend. Why not join them, hey? Why fight them off if you can join them? Here, Amex data here, I thought was pretty impressive. Profits, revenue only slightly beating, but still overall pretty good. River Braid, you're very kind. The Neo JAC news, yeah, that's interesting. I haven't seen real confirmation of that yet, Andrea. It's on my radar. There's a rumor that NIO is going to buy out JAC, their joint venture partner. Now, JAC also was a joint venture partner of Volkswagen, for example, and they've got lots of joint venture partners. So I'm not sure that what we're talking about is necessarily NIO focused. Be an interesting development if it was, but I'll wait for some confirmation. If there is some confirmation, I will definitely be letting you know, rather than just spouting out rumors. Very depressive altogether. It never is. You know why? Because we can make money today. And if you realize that actually down markets is probably easier to make money because volatility goes up than in glorious markets, suddenly you don't look at the world the same way. And if that's something that you struggle with right now, seriously, come and join me on Sunday. Links right down below me here, felixfriends.org/webinar, and I'll break it down for you. I'll teach you the core strategy for a one-stock trading plan. Justin, in terms of today's options expiration, if Elliott's to be believed, it should be downwards pressure from the options. So we'll see. Israel produces their own oil, I think. No, they're imported. They're imported. Maybe they have a little fountain somewhere or something, but they import their oil. Adrian, I'm very happy to send you a recording of the live class on Sunday if you can't make it. Although if you can join it live, then it makes a big difference because you can actually ask questions and so on. It's a lot more engaging. Thank you for the 215 likes. We're still about 400 short, but there we are. Nice teapot. Yes, it's a lovely one, actually, isn't it? You see it? It's a Japanese pot. Let me show it to you. This is now a tea channel. Look at that. Isn't that lovely? And it's got birds on it and, gold paint and all sorts. Japanese china which is a strange term, isn't it? Porcelain. Is actually very nice. And this teacup, where's this from? I think it might also be Japanese. Farooq, downward pressure from options today. Okay, there is, and this is a little technical. We're not going to get massively into it. We're in negative gamma land, which means the market makers, and like Elliot, for example, and Jerry, two of our coaches were market makers in their professional career. They sell when the market goes down. So it kind of tends to add downward pressure. Doesn't mean it has to be, but it tends to add to it. Giovanni, there are too many fake Felix Pren pages. I know there really are, Giovanni. I appreciate that. I'll send you the link. I'll put it in the description in the future. Okay, we've got a question here on Tesla. All right, let's have a look at that. So Tesla, do I think it's going to fall below $200? Well, you've got the support here at the previous peak, sort of 213. Anything else? Well, not a lot. Below that, it's sort of 164. We can have a look at options market support. And I know some of you are like, I don't really want to know the options market, but it can give you free information. And let me show you how you look that up. You go to optionswatch.io. Link again is down below. You just type in Tesla. You click on Tesla. And you can then see these red bars here. So for this week, this is where put positions are. The big ones are the ones that matter. So there are a load at 220. That's supportive. And then there are a load down here at 200. So that's your support, 220 and 200. Now you could also go into next week, and you can see is it any different. And the support is more at 200. could maybe go out into November 17th, which is the monthly options expiration date, and again see where's the support. Support sits at 200. So there's pretty strong support at 200. It doesn't mean it's impossible to break through it, but it's good to know that it's there. And that's going to be supportive. So it's an indicator, not the answer, but it's an indicator that's pretty useful. How do you keep up to date with the market news and stuff, says Brandon. I watch a brilliant YouTube channel. It's called Felix and Friends. I do it anyway because I trade and I enjoy it. It's a passion of mine to understand what's going on. So I read about it a little bit. I have a community of people who are smart. We have our coaching team who are insane. Like Elliot was a market maker for options trader for 20 years. Like Jerry, one of the first options traders ever, started in the early 70s in Chicago, the Chicago Board of Options Exchange. He was a market maker there for 10 or 20 years. And then he managed $3 billion in a hedge fund for the next 40 years. And, these guys I can talk to, and that's obviously massively brilliant. And we exchange information and we exchange data points and everything else. And then I have the great pleasure of sharing it with you. Never heard a stock go down if you press the like button. Mohammed, that is true. That is scientific fact. So you know what to do. River, do you think SPY will go lower again today? Well, that's the magic question, isn't it? Let's have a look at SPY. I'd like it to sort of stay a little bit flattish personally, but that's not going to impact. So we're below the 150 moving average line, which isn't brilliant. Trading right now at yesterday's low, but it's early in the day. It doesn't mean all that much. A lot of options expiring today. How much? 2.5 trillion, I think. So that could give us some volatility at the end of the day. Doesn't necessarily mean one way or the other, but it's just going to give us a lot of volume today. I think the Israel story is unsettling because we don't know what's going to happen and the market really doesn't like it. So the market is essentially saying, get on with it. and then we'll feel a little bit more calm. But, the points I walked you through at the beginning of this stream around the Fed is obviously also weighing on markets today. So, we got support here at 421, 420. That's kind of the next support level there. And then, of course, you could also look in Options Watch and type in SPY and have a look at, where's the market sitting. And for today, it sits at 420. Can you see that? That red middle finger there, that one there. So that's your support. 420 is pretty serious support. Enphase, unfortunately, solar stocks tend to do that to me. I used to own some solar stocks, never bought them again. I got burned too badly. And I just think it's all government politics and import duties and subsidies. And that's why I'm not really a fan of such things that are heavily I never really buy defense companies. I just don't buy things where the government decides largely whether or not this is a success or when it is a success. So NEO, $7 today support. We go out there. Who asked that, by the way? I missed it. It scrolled up. Oh, no, Michael there. And then for November, it's actually a little higher at 750. So yeah, it's that kind of, it was the same last week. I remember that from my Saturday video. So it hasn't really changed, which is somewhat positive. But yeah, that's the support essentially, $7.50, $7. Do you ever take to Kopok curve? I can't say that I do, no. What does that look like? Kopok curve. What does that measure? Never heard of it. Price momentum indicator to determine major lows in the market for long-term strategies rather than intraday trading. Okay, market's open, by the way. Trend direction. So for the longer-term trajectory, that might be it. So the I guess your thought here would then be it's going to roll off again. Is that the idea? Does it ever correct quickly? But here it was rolling off and the market was going sideways. Here it rolled off, it went down a bit and then bounced back up. So yeah, interesting. No, I've never heard of it, to be honest with you. Thank you for introducing it. Trading indicator for the indices. Interesting. Market ding ding ding. Should we have a look, or would you rather not know? Is this the time to decide? Run, or are you about to see what's going to happen? We're still short like 400 likes easily. It's so hard to click the like button, isn't it? You can do it. I know you need encouragement, but you can do it. Okay, Google is down 0.2%, Meta up a little bit, Tesla down another 1.4%. Cisco? What's Cisco doing up here? We're missing some stocks. Have you noticed? We're missing like Nvidia. We're missing. This is meant to be sorted by market cap. What the heck happened? That's really weird. Seriously, what happened to Nvidia? Delisted? I'm kidding. Don't freak out. No, it's just a tech glitch. It'll undoubtedly fix itself in a moment. But yeah, we're missing a lot of stocks here this morning, which is weird. Tess, Christopher, thank you very much for the likes, which I appreciate. 300 so far. Keep them coming. Really weird. Like, why are we missing a lot of the big stocks in our allegedly second by second thing? Current trading day. Yep, that's what we want. And yep, we haven't got any crazy filters on. Nope, we don't. So weird. I'm going to hit refresh. Okay, here we are. Brilliant. Okay, Amazon pretty much flat. Nvidia down 0.5 point. Tesla down 1.4%. JP Morgan down another 0.5%. Why is that? And we'll have a look at that in a second. And oil stocks down a bit. Oracle down 1.2%. But it's not a massive move, is it? I mean, what's QQQ doing? QQQ is down 0.25 percentage point. Not a huge amount. So it's one of those mornings where we're just feeling a little bit queasy, but not like we're not sick. I want QQQ. That's what I wanted. Here we go. So we're trading. Yeah, we're down again a little bit, which is you want to close above yesterday's low at 359, essentially. So we want to close at least a percentage point up. Do you think Jack Tateman is an XRP bot, or is that a real person? I always wonder with the crypto thing. Adrian, the options volume and the open interest is pretty much live, near live at least. Darren, if your experience is that everything you buy goes down, that tends to happen. You need a longer time horizon and you need patience. And if you have done your research, don't just buy a stock on one day. Make a plan to buy it maybe on the first of the month for the next 6 months or the next 12 months or the next 200 months. And then psychologically, it becomes a lot easier because you know this isn't your final price. You're just putting 1% of your money into it, and then you do another percent next month, another percent next month, and so on. It makes it honestly a heck of a lot easier on the psyche, which is what this is all about. PayPal, yeah, PayPal is just keeps bleeding. Massive jump down again. Why is that? No idea. Gap down actually. Might almost want to trade that, but earnings are coming up a little bit too close, so we probably won't. Yeah, so I think with something like PayPal, I mean, you watched my PayPal video on that. I did say it requires a strong stomach lining and a huge amount of patience because this thing isn't going to turn itself around in a week, right? having said that, if you remember Meta and how that was the world's worst stock and it was going to go to zero, it went down 76% over a year, and then it's recovered almost all the way up again. So one of the best performing stocks in the year. It really is a question of PayPal delivering and the new management delivering, and that won't happen in a quarter or 2 quarters. It'll take much longer. And yeah, you're talking about Neo. Neo actually up a little bit, which is yeah, maybe Chinese GDP data, at least on the surface, looks better than expected, but it's a fair distance to the 50-day moving average line, right, at almost $10 there. Let's look at some of our other favorite tech stocks. Nvidia is flat now. That's positive. It's recovering. Let's have another look at QQQ. That's only 1/3% down now, so it is coming back up. We can look at something like SoFi, more techy. SoFi video coming out today, by the way. A bit of digging there. Down 1.8%, which is just, well, sort of zigzag pattern of trades. Watch out for the 150 moving average line there. That held in early October. So you kind of want that to hold again. That sits at about 750. Anything else? Palantir? You'd think they'd benefit from war, wouldn't you? Apparently not. Start a massive war in the Ukraine and the Middle East, and everyone goes, nope. Baffling. Down 2.4%. Can't really tell you why, to be honest with you. Is it a sell signal? Not quite yet. I would say you probably have to fall through $15 again. 15, that's probably where it would be. Microsoft, some of you were shouting out. Pretty steady. Look at that nice consistency up there above the 50-day moving average line. So nothing really to worry about on that front. PLTR, we're just there. Yeah, did Neo buy out JAC? I've seen the rumor. I'm not sure it's confirmed, to be honest with you. We'll see. And whether or not it's a good idea, we'll see as well. I'm not sure that's got anything to do with this. Enphase, yeah, everyone's talking about Enphase because that fell off a cliff yesterday. A massive gap down, 13% yesterday. Does anyone know why? SolarEdge's gloomy forecast. So in a sense, it doesn't make a lot of sense because we had similar news in the last earnings, not that I follow this stock closely, which is what explains that gap down here. And then we're getting it again because a competitor says the same thing. So it's a bit of a strange story. But yeah, it's just not my sector, honestly. Solar, I know the sun's there and all of that, but I don't know. I guess what I'm saying is you can make solar panels cheaper in China, for example. So it's a question of politics. That's essentially what it comes down to. And most solar demand only exists because of subsidies. So, Isn't Papa Powell speaking today? Oh, he spoke yesterday. I don't think he's speaking today. There is a blackout period starting today, or tomorrow rather, which means Fed presidents cannot talk, which is lovely. So we're going to get some peace and quiet for a little bit because that lot had to put a cork in it. 2 more to suffer through today, and that'll be the end of that. James, you say it's confirmed by Neo. Let me have a look. That's very interesting news then. Neo may acquire assets. I'm not sure it's quite the same thing as confirmed. These guys are usually pretty on top of things. So I would say probably not confirmed yet, which is what I thought. But it looks like it's going to happen. Looks like it's going to happen. Yeah. Which, if the maths adds up, then it makes sense. So then all the people who were whinging that NIO doesn't make its own cars, well, that would be the end of that conversation, wouldn't it? Interesting move. I wonder why JSC is doing it. Okay. Well, I'll dig more into it. See, there's more in the Chinese press that might cover that. Felix 2023, the sun is there. What happened? I just joined. Oh, I don't think we can do a summary in like 3 minutes, but go to the beginning and run through the first 10 minutes. That would be helpful. Should this improve margins for NIO? Depends on how much of a premium JAC was charging. That's really what it depends on, doesn't it? From a capital basis point of view, not owning your manufacturing can actually be a really helpful thing because it means you don't have to spend the capital. But it depends on how much premium your joint venture partner is getting. I'm not sick, by the way. There's something called bioplasma. It's amazing. Can you see that? No. There we go. Bioplasma. Bit of product placement. No, I don't get anything for this. There's cell salts, basically. Just give you energy. Just insane amount of energy. So I normally take one of those a day. 10% of each car sale. That's quite a lot. So I'll have to run through the maths. I have to run through the numbers. Once we know exactly how much they're paying for the assets, then it should be a fairly simple calculation to see where they break even. So Andrea says 10K RMB per car. And some of you are saying 10%, not quite the same number, but we'll see what it is. I'll do some deep diving into the subject and I'll share it with you guys, of course. If you want energy, try Captatron. I don't really want energy. This is more like, it's some German chap who came up with this like 100 years ago. Every cell you have in your body contains these 12 salts. So if you pop some of those in, if you ever feel like you're going to get a sore throat or something, pop one of those in and it's gone. It's incredible. It's really incredible. Buying stock in bioplasma. Yeah, I don't know. Are they listed? I don't know. Right, there we are. I appreciate you watching and tuning in. If you haven't already, and you want to learn how to trade one stock, one strategy, 80% probability of making money on each trade, not financial advice, of course, then come and join me on Sunday here at Felix webinar, and we'll learn together. Well, hopefully I won't learn and I'll teach you. I'll break it down for you, the core strategy. And I thank you for tuning in. I wish you a beautiful, glorious weekend. For those of you guys in the community, of course, I'll be doing my coaching call on Sunday as well. So I'll see you live on that one. And all the best.